Welcome back to the Daily Crypto Roundup. Today feels like one of those days where the market is telling two stories at the same time. On one side, Bitcoin is climbing again, Wall Street is getting more comfortable building products around it, and the broader tone feels a lot stronger than it did during the panic earlier this year. On the other side, XRP is suddenly all over the conversation. It is pulling in major ETF-related inflows, getting plugged into one of the biggest consumer ecosystems in Japan, and once again becoming the center of one of the market's boldest debates. Can it actually challenge Ethereum over time? Put all of that together, and the bigger theme is pretty clear. Crypto is not just moving on hype right now. It is moving through access, products, and distribution. Quick one before we dive in. This episode is sponsored by Rakuten, and if you have been thinking about getting into crypto or switching platforms, now is a good time to check them out through our link in the description. We are also giving away 20 XRP for a limited time to one person who signs up using our link. So if you do, drop a comment below and let us know. Let's start with Bitcoin, because the price action matters. Bitcoin has climbed back to its highest level since the February 5th crash, when the market took a serious hit and price plunged towards $60,000. Now, with Bitcoin pushing back up near 76,000, the entire tone of the market changes. Earlier in the year, traders were asking whether that drop was the start of something much uglier. They were wondering if the market had finally run out of steam, whether the macro environment was going to crush risk assets again, and whether crypto was heading into another long stretch of weakness. But when Bitcoin claws back that kind of ground, it sends a completely different signal. It tells you buyers were willing to absorb fear, step back in, and keep defending the trend. That does not mean everything is suddenly safe. It does not mean volatility is gone. And it definitely does not mean the market can only go one way from here. But recoveries like this matter because they rebuild confidence. They shift the conversation from survival back to upside. Once traders see Bitcoin reclaiming levels that looked out of reach during a panic move, they start thinking differently. They stop asking whether the bounce is real, and they start asking how much more room there is if momentum keeps building. And that leads directly into the next big Bitcoin story of the day, which is Goldman Sachs filing for a Bitcoin income ETF. This is one of those headlines that tells you a lot about where the market is now, even beyond the product itself. Years ago, the big question was whether institutions would touch Bitcoin at all. Then the conversation shifted to whether major firms would support spot ETF exposure. Now we are in a different phase entirely. One of the biggest names on Wall Street is not asking whether Bitcoin belongs in portfolios. It is asking how to package Bitcoin into new structures for traditional investors. That is a major step forward for the asset class. It tells you Bitcoin is no longer being treated like some outsider instrument that only crypto-native traders care about. It is being treated like a legitimate underlying asset that can be engineered into different products depending on what investors want. In this case, Goldman's proposed fund is designed around the idea of Bitcoin exposure plus income generation, which means it is trying to serve a type of investor who wants some access to Bitcoin's potential while also bringing in option premium and trying to make the ride feel more controlled. That is classic Wall Street behavior. Traditional finance rarely wants the raw, unfiltered version of the asset if it can avoid it. It wants a version that feels structured, managed, and familiar. So while many Bitcoin believers would still prefer straight spot exposure, this filing matters because it shows the way big financial firms now think about crypto. They are no longer standing outside the room debating whether it belongs. They are already inside the room, working out how many products they can build around it. And that is bullish in its own way. Not because this particular ETF is the most exciting thing in the world for crypto purists, but because it reinforces a larger trend. Bitcoin is becoming part of the financial product machine. Once that happens, the asset moves deeper into the mainstream. It gets discussed differently, sold differently, and positioned differently. That does not remove risk. But it does push Bitcoin further away from the old idea that it is just a speculative niche sitting on the edge of the financial system. Now, while Bitcoin is recovering and traditional finance is leaning further in, XRP has probably had the busiest narrative day of any major crypto asset. The first major story is the fund flow number. XRP-related investment products reportedly pulled in $119.6 million in a single week, which was its strongest weekly inflow figure since December. That is a very big number for XRP, and it becomes even more interesting when you look at the wider context because it accounted for more than half of all crypto fund inflows globally during that period. That is not just a nice stat for XRP supporters to post online. That tells you something real about demand. It tells you there are investors actively allocating capital toward XRP-linked exposure at a meaningful scale. And the really interesting detail here is that most of that demand was not being led by the United States. Europe appears to have been doing most of the heavy lifting, while US-listed XRP products were relatively flat through the same period. That changes the shape of the story. Normally, when people think about a big crypto fund flow narrative, they assume the US is driving it. But in this case, the appetite was coming more from outside the American market. That matters because it suggests the XRP bid is not just a reaction to US-specific hype. It points to a broader international appetite for the asset, and that can matter a lot over time, especially for a token like XRP that has always pitched itself as part of a global payments future rather than just a domestic investment story. What makes this even more interesting is that the strong inflow number did not come with some explosive price breakout. XRP's price movement over that period was still relatively modest. That means one of two things is probably happening. Either the market is still working through heavy overhead selling pressure, or the demand is arriving quietly before price has fully responded. In either case, it creates tension in the story. When the money is clearly showing up but the price has not fully broken loose, traders start asking whether the market is setting up for something bigger later. And that brings us neatly into the next XRP headline, because Brad Garlinghouse has once again thrown fuel on the fire by saying XRP could potentially flip Ethereum. Now that is obviously a huge statement. Ethereum still sits far above XRP in market capitalization, and for XRP to catch it under current conditions would require a monster move. We are not talking about a small rally here. We are talking about the kind of expansion that would force the whole market to rethink how it values major crypto networks. So on the face of it, the claim sounds aggressive, maybe even outlandish. But the reason it keeps getting attention is that it plugs into a very specific XRP belief system. XRP supporters have always argued that the market has undervalued the asset's utility, particularly around cross-border payments, settlement speed, and institutional use cases. They see XRP as something that should benefit if finance moves further on-chain and if real-world transfer systems increasingly rely on digital rails that are faster and cheaper than what came before. That is the core of Garlinghouse's argument. The case is not simply that XRP will flip Ethereum because of hype. The case is that if regulation keeps improving, if institutional products continue expanding, and if real-world adoption increases, then XRP could close more of the gap than most people currently expect. That still does not mean it happens soon, and it certainly does not mean Ethereum is just going to step aside and let it happen. Ethereum still has enormous scale, deep infrastructure, major developer activity, and a huge role in decentralized finance and tokenization. So the claim should still be viewed as a long-term, high-conviction bet rather than an immediate market forecast. But even if you think the flip Ethereum talk is too much, it still matters because it keeps XRP in the center of the narrative. And crypto is a market where narratives can become self-reinforcing. The more people talk about whether something is possible, the more attention flows into the asset, the more traders watch it, and the more every piece of news starts to feel connected to a larger story. Now, if the ETF inflow angle was about institutional appetite, and the Ethereum comparison was about long-term valuation ambition, the Rakuten story is about something different entirely. It is about mainstream access. Rakuten, one of Japan's biggest digital commerce ecosystems, is now opening a path for users to convert loyalty points into crypto, including XRP. That immediately gives XRP exposure to a potential audience of around 44 million users. That is a big deal because it moves the story beyond speculation and trading. Loyalty points are normally trapped inside closed systems. You earn them, you spend them within specific rules, and that is the end of it. But when a major consumer ecosystem starts letting those points become a bridge into crypto, it changes the shape of the user journey. Suddenly, crypto is not just something people buy separately on an exchange. It becomes something they can reach through a system they already use in daily life. And that is why this Rakuten move stands out. This is not just another exchange listing. It is not just another token announcement. It is XRP being connected to a consumer-facing platform that ordinary people already recognize, already trust, and already interact with. In practical terms, that means XRP is getting closer to everyday utility, or, at the very least, closer to everyday visibility. For Ripple and the XRP ecosystem, that matters a lot. Ripple has always leaned heavily into the payments identity. It has always wanted XRP to be seen as something useful for moving value, not just something that sits in wallets waiting for the next market cycle. So when a story like this emerges, it gives XRP holders something they have wanted for a long time: a real-world consumer adoption angle that feels tangible. And when you put these three XRP stories together, the picture becomes even stronger. First, money is flowing into XRP-related investment products. Second, the CEO is publicly laying out a massive long-term ambition relative to Ethereum. Third, the asset is getting integrated into a huge Japanese consumer ecosystem through loyalty point conversion and payments infrastructure. That is three very different types of momentum all landing at once. Institutional interest, narrative expansion, and mainstream access. You do not often get all three in the same stretch. Now, stepping back, what does all of this tell us about the market right now? It tells us crypto is entering another phase where legitimacy and distribution matter just as much as raw hype. Bitcoin is not just rising because traders are excited. It is also benefiting from a world where giant financial institutions are increasingly comfortable wrapping products around it. XRP is not just trending because people want a speculative bounce. It is also seeing concrete product flows, corporate ecosystem integration, and executive-level narrative positioning. That does not mean the market is now clean, rational, or easy to trust. Crypto still moves fast. It still overreacts. It still turns every bold claim into a war between believers and skeptics. But the difference right now is that the stories are starting to carry more infrastructure behind them. These are not just memes. These are products, filings, flows, and integrations. Bitcoin's recovery tells you confidence is rebuilding. Goldman's ETF filing tells you traditional finance wants more ways to monetize crypto demand. XRP's inflow number tells you capital is looking at it seriously again. The Rakuten move tells you adoption can still arrive through unexpected channels. And the flip-Ethereum claim tells you the ambition inside the XRP story is not getting any smaller. If you are enjoying the show, follow the podcast so you do not miss the next episode. And as always, we will see you at the top.